Hey, everybody. Welcome to the morning market briefing. It's Thursday, June 18th, 2026. Hope you're doing well out there. No call tomorrow. Reminder, no call on Friday, June 19th. Juneteenth is a stock market holiday, so we will not be here, but hope you guys have a great day off or a great day at work. Whatever you're doing, enjoy it. No call. Ben, let's jump in. We got a lot to cover. Most notably, perhaps, Kevin Warsh in his first press conference as Fed chair. Certainly a number of facets of that I think people will find fascinating, but he's not the only one talking about the economy. Trump seems to be making a hard pivot, moving straight into focusing on the midterms and really highlighting economic situations and even noting oil down, stocks up in a deal signing. So Trump's making that move. I know people love when we talk politics, but this seemed inevitable that he would have to refocus.
Yeah, I think I think he's totally changed. He's trying to turn the page. He understands. It's very interesting when you think about Trump. Like, he keys on things in history, and I have never heard him say it's the economy's stupid, but
he's thinking it.
He's thinking it, and he thinks of these phrases, and especially from the 80s and 90s, I feel like, and then he just puts it on repeat. And I'm sure that's going on repeat on the White House right now. It's very interesting. At the G7 in his big press conference, he said the one president I don't want to be like was Herbert Hoover. He's like, Nixon, I don't know, there's some others, but really didn't want to be Herbert Hoover and cause a depression. And we could have had a depression with this war. And he said, but we're not going to have that anymore.
But he stopped the war. So,
yeah. So I think that what in effect this means is I think that it's going to be full court press from the White House to get the economy motoring as strong as possible and the markets going as strong as possible into the midterms. It's going to be, they're going to have to offset some of the supply that's coming and that's not being matched up with monetary supply increase. But I think it's definitely Bessent's back front stage. I think he'll be back. I think some of these trade deals will be back. But I don't anticipate major tariff fights. I know we're renegotiating the USMCA, but I think that's probably going to go through.
I think that's going to be very anticlimactic.
Yeah. And so I think that he knows that this is the one way they can salvage the midterms.
Yep.
It is improving this.
That is the playbook, and we'll see how effective it is. I think that the challenge that they're going to face is, even throughout the war, whether you agreed with it or disagreed with it, the opposition to Trump's party has been pretty front and center with their messaging on lack of affordability. So there's an element of playing catch up. Regardless of what the data says, regardless of if we've seen peak inflation, I think they're going to have to really rally enthusiasm, especially from the handful of independent and undecided voters in some of these races, and try to get them on board quickly. We do have some data coming in from the Philly Fed. Ben, how's that looking?
Better than May. May was an anomaly for the Philly Fed. You had New York that was strong. You had Richmond that was strong. You had the ISM, which all of these, ultimately, you're looking at these to get a read on what happens with the broader ISM index. And you had the ISM that was very weak. But in May, ISM was very strong. But in May, Philly was very weak. We're back to solid growth this time around. If we look at the internals, new orders went from negative 1.7 to 27.3. So that was extraordinary. Prices did go up from 47.9 to 53.2, but certainly not crazy at all. And then prices received actually went down. So, and the employment number was good too. So overall, good news from the Philly Fed. We also had upward expectations on future new orders. So they also say what's going to happen in 6 months. New orders went from 53.5 to 60.8. And prices paid came down a lot from 70.0 to 63.2. So people expecting to order more for less, which is great news for the economy, which is exactly what Kevin Warsh said is possible, but no one believes him.
No.
But he thinks that we can do actually better and do it without creating a ton of inflation.
Let's come back to Warsh. I want to close on him because I do think he's arguably the story of the week. Even with the war going on, if you're at home and he actually mentioned this in his press conference, but using a press conference to actually speak to families, if you're at home and you're worried about your economic situation, he's going to have a greater impact over the coming years than just about anybody. So we'll come back to him. We did see Bank of England maintain rates. What else are we seeing just kind of internationally from central banks?
I think the central banks that are succeeding right now are the ones who are firmly saying we're going to be back at inflation and chill out.
Yep.
And I think that what they're doing is, I think that either it's a concerted effort with knowledge of what they're doing, or they're accidentally ending up in that place. But what they're doing is essentially reestablishing credibility, and they recognize that credibility is not based on who is in charge. It's not based on what you're saying, but it's based on what you're doing and how you respond. And I think right now, what a lot of the central banks are doing is they're saying, okay, we're going to take control of the front end of the curve and make sure that that's maybe even aggressively tight in order to lower the back end of the curve, lower those rates that impact your mortgage, that people actually use to borrow. So by being more strident in how you're dealing with the front end of the curve, you're able to actually get some relief on the back end of the curve. And that's what we saw in Japan. That's what we saw in the EU. We didn't quite see that in the UK today, but they've been doing that. And I think that's what we saw at the Fed as well yesterday.
Yep. So let's talk about the Fed. Lots to unpack. Certainly a different tone of a press conference. It was, I admittedly did not get around to watching it until this morning. I had a meeting right during it. I assume the cleaners were here during the press conference. Good. So all is well here at Narwhal.
I do actually need to coming back to the discussion yesterday, one of the garbage cans actually is broken. I do need to fix that, and it's an easy fix, but I did notice
slammed
that
it in the wall. They slam it into the TV. Who knows?
Yeah, the lid is totally busted.
Yeah, which is that. I mean, it is tough. Again, I'll reiterate, very difficult to take a trash bag out without slamming the trash can. Lots of commentary on Warsh. I think some of it is quite merited in the sense that this was really tonally a significantly different feel to the press conference. I've read a lot. I actually read more before I watched it. I think some of those points are misguided. The one that I have not heard, no one shares this take perhaps, or at least not anybody as credible as me, but Kevin Warsh sounds like a youth pastor. He sounds like a young life leader. We just played an awesome game of silly string war in the woods. And all right, guys, now it's time to calm down. Let's focus. I've got a lesson for you. Very, very youth leader vibes. That was my biggest takeaway tonally.
His cadence, his very interesting cadence of speaking as well. He doesn't always finish a point, and when he does, he almost knows where he's gonna go, and that's what he's gonna do.
And then he does that. And if you've had any experience with youth pastors, either as an attendee or I'm not a youth pastor, but I teach high school Sunday school. Kevin Warsh had, he got up early and thought he could write a Sunday school lesson, and he had probably about a page of notes and was thinking, "Boy, we got 45 minutes here." So let's get to the substance of it. I did appreciate what seemed to be a newfound call for accountability. I felt like that was a takeaway in the sense of, no, the target's the target, and we're worried about what's on the left of the decimal before we can even worry about what's on the right of the decimal on the inflation target, and we're going to get there. Why would we think about changing? I appreciated the directness. What were your biggest takeaways?
Two biggest takeaways. Number one, no forward guidance from him, certainly, and I think even from the committee. Number two, task forces.
So many task forces, man.
They want to redo their communication. In other words, they want to get rid of.
Yep.
He wants to get rid of communication. So they talk about forward guidance, dot plots, press conferences, transcripts, probably even interviews, all of these things. And then I think the big takeaway there is why change the communication. And he basically said, and I think this is an important insight, he doesn't want to be telling the market what to do, because if he tells the market what to do, the market's going to do it, and the Fed's not going to have the information that the market gives you. If the market's getting smashed, what does that tell you? It probably tells you the economy might not be doing so well and that financial conditions might be too tight. But if
he says, hey, we're going to cut, and the market rallies on that, all of a sudden you haven't actually gotten to take that action, and you don't know what's the real substance.
Yep. Exactly. And if you say we're going to hike 3 times in a row, the market's going to price in 3 hikes. It's not going to say, well, we actually think the Fed should do this because this is the optimal way of doing things. And it's interesting because Rick Rieder actually said this. This is the guy who managed the most fixed income in the world. $2.3 trillion he manages. Even more than Elon Musk.
Yeah.
And he said it is important not to do what you think is right, but what you think the Fed's going to do. And I think Kevin Warsh is trying to dispel bond managers and any fund manager of that notion.
Mm-hmm.
He wants fund managers to actually do what is right because that gives him the ability to do his job better and make better decisions.
He wants to react to the market, not vice versa.
Yes. And I think that was very interesting, and it shows that he's actually someone who's traded markets, unlike Jay Powell, unlike Ben Bernanke, unlike Nick Timiraos. He's traded them with the best in the world, Scott Bessent, Stan Druckenmiller, etc. So that's number one, is on the communication side. Number two is the data. He says that, and I thought this was a really interesting analogy. He said, we're making decisions based on the echoes of history. And he says that we're not using the right data. We're using data based on things that are probably spurious. No one actually buys anymore. And he says that even if we were using that, it's not even real time.
Mm-hmm.
And he says that CEOs aren't making decisions based on that data. CEOs are making decisions based on yesterday's sales and their trends that aren't getting revised 6 months later.
Yep.
And so he wants to make better decisions with better data.
And I thought the nuance of his approach, even on the assessment, there was one question about, do you think Fed policy is sufficiently restrictive at this point in time? Even going into the nuance of, well, it's circumstantial. In the housing market, there certainly seems to be enough pressure against it that it is restrictive. But financial conditions and financial markets, that does not seem to be the case. Recognizing that nuance, I think, alone is a little bit of a different way of looking at data. Recognizing that, hey, when we do this, it might help over here, but over there it might create an issue, and vice versa. And I think that's, in a lot of ways, I think, been missing. I don't know that he's got the perfect set of see-through lenses for that. I don't know that he doesn't. But simply recognizing that the economy is not one thing, I found refreshing.
I'm also curious what your thoughts are, and then we can talk about the market reaction. But I'm curious what your thoughts are on his management approach, because I think that was a big secondary theme of the call, of the press conference yesterday. And it seems like, at least he's trying to portray that there's a palpable excitement there. He's given people more, he calls it equity, in decision making, and he has these task forces, and he wants to do things differently, and he says that there's a lot of agreement about doing that. But in other words, what he's basically saying to the 900 PhDs at the Fed, and especially the 12 voting members and the 18 or the 18 people other people who submit dots is get to work.
Yep.
Do work and like make good decisions, not just come in, check in, clock out, and go home. And I think that can be an inspiring message in the first 6 weeks, but I'm curious to see if that momentum can be sustained.
I'm curious on the task force approach because there was a number of them that he referenced hopefully being wrapped up by year end. I think the challenge that he is going to face is not unique to the Fed. It's really a challenge for any organization. And hearing about the task force, it reminded yesterday I was at a board of directors training thing for a new, like a nonprofit that I'm joining the board of. And one of the responsibilities for everyone is they have to join a committee there. For me, it was relatively obvious. I was recruited is too strong of a word, but I was asked to consider this opportunity specifically because they were understaffed and underserved on finances. It's pretty obvious. Person sitting next to me, they had no idea what committee they wanted to be on. That's going to be the challenges that he's going to face with the task force. Because if you can find someone that says, hey, I'm really passionate about this specific project and I've got a team that's with me and we want to do this and we want to run with it, I think you can have outstanding results. The challenge is going to be, what are the task forces that are of utmost importance to him and perhaps even to us as American citizens that people just don't find attractive? What's going to happen with those? How long is that going to take? How's it going to go? I like the idea of segmenting this out. And it's interesting because I think Timmerhouse specifically really criticized a lack of understanding the process. And I did not share that concern from listening to this. I think he actually, by explaining the task forces, what they're going to do, not necessarily how they're going to do it. Part of it is we got to figure out how they're going to do it. I actually felt like we learned more about what's going to happen, not with policy, but we learned more about what's going to be happening with process than maybe we ever have.
Yeah, it just didn't agree with what Nick Timmerhouse
Yeah, he just
wanted.
doesn't like it.
I mean, he thinks, and he kind of, showed his hand here when he asked this question. He said, look, inflation is high. Aren't you, and you talk about credibility, but aren't you risking your credibility when, by all accounts, you should be raising rates at this meeting in order to account for inflation? And Kevin Warsh basically said,
yeah, maybe with you.
Yeah, right. Because Timmerhouse is using the old process of let's look in the rearview mirror and look at what inflation did 6 months ago and then make prescriptive policy based on that.
And tell everybody what it's going to be for the next 6 months.
And Warsh said, we sat in the room and no one at that table expressed that opinion that we should be raising rates today. And Timmerhouse didn't like that.
And his takeaway was, well, I don't know what they talked about.
Yep. A couple market reactions and then 3 takeaways from me in terms of how the market interpreted this. Number one, interest rates, massive flattener, which we were talking about. Short end rates went up, long end rates came down. In fact, a lot of people say, oh, stay away from the long bond because it's scary in it. That was the safest place to be yesterday.
Yep.
That's why we're buying that. It's incredibly attractive risk reward. Did we think it was going to be that attractive risk reward relative to the rest of the bond market yesterday? No, but
we'll take it.
But this is why we're there. Number 2, inflation break evens. Everyone was concerned about Kevin Warsh and his lack of credibility, and he was just going to let inflation run hot. Inflation break evens came down yesterday. 3 basis points on the 2-year, 4 basis points on the 10-year. We're now down to 2.26% on the 2-year, which is about as low as we've been since COVID.
Mm-hmm.
And it goes back to March levels, pre-war everything. Stocks fell significantly. U.S. dollar strengthened massively. Stocks I'm not freaking out about. I think that was just kind of a mini stock tantrum that happens from time to time. People sell ETFs. They glom on headlines. I'm not worried about that. The market's up today. What he achieved, 3 things. Number 1, I think he restored credibility on inflation. We see that in inflation break-evens. He was very firm on that, and I think he achieved that. I give him an A+ for achieving that, and I can't believe he did it in 1 meeting.
Yep.
Now he has to continue it, but A+. He was seen as hawkish. I don't know if that's the right interpretation, but that's the message he wanted to portray because he wanted to keep that long end down. And number three, I think it's very clear that he shook things up and set new precedents with, frankly, fairly little major market reaction. And so I think that's a win. It's a pass. I don't think there was going to be like, you can't get an A because all these task forces are yet to be determined. So it was pass fail. And I think he passed because he was seen as, hey, we're going to give this guy the benefit of the doubt right now. He seems like he has a plan. He's not going in there like crazy, but he has a plan, and we'll see what happens.
Yep. Yeah, I was generally encouraged. I thought it was refreshing, if nothing else, to hear something different. And I mean, Powell, each successive speech was just a copy and paste of select phrases of previous renderings of the same speech. And we may be sitting here in 18 months saying the same thing about Kevin Warsh. I'm very curious specifically on the pressers to see if those continue. I mean, he noted specifically, press conferences are a very effective tool, which I alluded to his commentary on that earlier. And he's like, but only if you have something important to say. Yeah. I think we will certainly continue. I would expect that we continue to get the presser for the foreseeable future, but there may be a time period in which he says there's nothing new to say, which would be indicative of success of his entire process and his plan. If he is coming out with nothing to say, it means inflation is where we want it, employment is where we want it, and I don't think he's going to be a big victory lap guy. So we'll see how that goes next week. What are you looking forward to?
A quiet week next week. We've got a couple earnings reports. FedEx will be interesting. I think a little bit of barometer on the economy. We did get really good data out of Bank of America, actually. Their credit card data looks just unbelievable. And not just at the high end, by the way. The gap between the high end and the low end is shrinking in terms of spending, but it's also shrinking in terms of income, which means that lower end income is rising, which I don't think a lot of people are talking about. You also have an investor day for Qualcomm. Micron earnings. Micron's been a big meme stock lately, so we'll get that on Wednesday evening. But otherwise than that, it'll be a quiet week, quiet end to the quarter.
Yep. Good stuff. All right, we'll wrap it up there. You guys have a great weekend. Again, no call tomorrow. Make sure you subscribe, hit the like button if you're on YouTube, share it with a friend, and we will talk to you on Monday.